Governments always tell you they're protecting your future. They talk about reserves, stability, national security. But if you pay attention to what's actually happening right now, you'll see something far more interesting than the official story. Russia and China aren't just trading gold. They're quietly restructuring the global financial system 1 ounce at a time. Bilateral precious metals trade between them surged by 80% to $1 billion in 2025 alone. This isn't simple commerce. This is a coordinated strategy to dismantle Western financial dominance, to create alternative architecture for global money, and to position themselves as the ones holding real value when the dollar weakens. The competition between these two powers for gold supremacy is reshaping markets and trade routes. It looks like a secret war, because it is. Let's start with Russia's strategy. Since 2013, Russia prepared for isolation. The leadership watched what happened to Iran, Venezuela, every nation too dependent on dollars. So Russia started accumulating gold systematically, methodically, like a nation preparing for financial siege. By 2022, Russia's central bank had roughly 2,336 tons, making it the 5th largest holder globally. But this isn't sitting in vaults. In 2022, after sanctions hit and Russian dollar assets were frozen, Moscow made a radical move. They pegged the ruble directly to gold, 5,000 rubles now by exactly 1 ounce. That's not currency backed by promises. That's currency anchored to something real, something physical, something that cannot be frozen by foreign governments. Before 2022, Russia exported 302 tons of gold annually to Western markets. Last year, it dropped to 166 tons. That gold went to China, India, the Middle East, anywhere not threatening to confiscate it. Russia's central bank now purchases 80% of domestically produced gold. Every ounce stays in friendly hands. Russia needs China, and China has been thinking along similar lines, just at massive scale. China's gold accumulation might be the most aggressive central bank buying spree in modern history. China doesn't announce it like Western banks. There's no press release. But the evidence is clear. In 2023, the PBOC became the world's largest central bank buyer, adding 225 tons in a single year. Since late 2024, they haven't stopped. For 11 consecutive months, China kept buying. Here's what reveals the strategy. China's official reserves are 2,303 tons, but experts believe they actually hold around 5,065 tons. China accumulates real value under the radar, while the world watches incomplete numbers. Why? Diversification. China holds $3.2 trillion in foreign exchange. In 2016, roughly 59% was US dollars. By 2025, that dropped to 25%. The rest went into euros, yuan-denominated assets, and gold. The freezing of Russian reserves in 2022 was the wake-up call. Chinese financiers watched $300 billion of Russian assets disappear with a keystroke. They realized digital reserves can be stolen by policymakers. Physical gold cannot. It lives in vaults. It cannot be frozen. It belongs to whoever holds it. Both nations are building parallel financial infrastructure, competing simultaneously. Russia is constructing its own gold exchange in St. Petersburg, launching by end of 2025. This exchange won't be priced in dollars. It will establish independent benchmarks, fragmented from Western markets. Gold could have multiple prices, not one set in London. Russia segments the market, creating de-dollarized gold for friendly nations. China already did something similar. They opened an offshore gold vault in Hong Kong. Nations with positive trade balances and surplus yuan can convert that yuan directly into physical gold through the Shanghai Gold Exchange. No dollars required, none. Instead of converting trade surpluses into dollar reserves, nations hold real metal. They bypass the dollar system entirely, and both nations happen to be the world's top 2 gold producers. Russia produces about 330 tons annually. China produces 380 tons. Combined, they control a massive share of global gold supply coming into the market each year. They don't just control demand, they control production. They control the entire supply chain. If Russia and China successfully create parallel gold-based financial infrastructure, if they convince enough nations to participate, then the dollar's role as global reserve currency enters genuine danger. The United States built its post-World War II dominance through financial architecture. Every international transaction flows through dollar systems. Every central bank holds dollar reserves. Every nation needs dollars to buy oil, settle debts, access credit. But if you have gold, if you have access to alternative payment systems, suddenly the dollar becomes optional rather than mandatory. That terrifies Western institutions. And that's exactly what Russia and China are building. They're fragmenting the system, creating cracks, offering alternatives to nations tired of Western sanctions and dollar dependency. This isn't a secret war because it's hidden. It's secret because its magnitude remains invisible to most people. The news talks about gold prices and sanctions, but almost nobody connects the dots, recognizing fundamental restructuring underway. Whoever controls the money controls the world. For the last 80 years, the West controlled it. Russia and China are betting that's about to change. They're not fighting with weapons, they're fighting with ounces, infrastructure, patience, and understanding that Western dominance isn't permanent. It's the current arrangement. Arrangements can be rearranged. If you pay attention, you can see it happening. If you don't, you'll wake up wondering why rules changed.